The opportunity for India is that we have the talent for software, we have the talent, we have emerging talent on hardware and manufacturing. There's also a local market, and there's also the physical location of innovation centers around Indian cities. So I think this is a very potent combination in terms of stepping up on the innovation cycle and helping on the research and development, not just for the Indian firms, but also for the global firms.
Namaste, welcome to Citti Media. I'm Kamal Shetty, your host for today. Finance Minister Nirmala Sitharamanji had recently announced the Union Budget, which has been the key focus of public policy conversations in India in the last few days. Today, we are going to talk about the budget, but also look at some very important themes that are associated with the Indian economy. We're going to try and identify the strengths and weaknesses of the Indian economy as we step into 2022 and beyond, and also identify the opportunities that lay ahead of us. And to do this, we have a very special guest, Aashish Chandorkar ji, who is counselor at India's permanent mission at the WTO. He's a very well-known public policy voice and has been management consultant for many years, as well as director of the SMAHI Foundation for Policy and Research, a think tank based in Bengaluru. Namaste, Aashish ji. Thank you for joining us today.
Namaste, Kamal. Thank you for having me on this conversation.
I want to begin at the outset by asking you about how you viewed the recently announced budget. What, in your view, were the most important features in the budget?
Sure, Kamal. So let me start off by saying that budgets historically have had a very accounting focus, right? Like if you see the commentary in the media, which leads up to the budget conversations, and even after that, a lot of focus is laid on the taxation aspect of the budget, the accounting aspect, how is government getting its revenues, where is it spending, and so on. I think in the last 2-3 editions, you see the budgets getting slightly more ambitious in terms of talking about a vision and future plans, not just focusing on the numbers. I mean, of course, the numbers will be there because that's the annual government exercise, but and this edition was especially more pronounced in terms of creating giving a direction to how the economy will evolve over the next few years. What does the government think about the new sectors which are potentially going to drive India's economic growth, the opportunities which exists in the coming decade. So the budget has become a little bit more focused on the vision aspect of the economy, which I think is a interesting and a good sign. You get to also then understand where might the government put its resources. That kind of becomes a leading indicator. So, for example, let's say 2019, the government spoke about 2020. Sorry, the government spoke about the Farmers Producers Organization. So it was like a lead indicator that agriculture will become an area of focus, and modernization of agriculture will become an area of focus in terms of making it more professional, more organized. There are various aspects to any sectoral change. So even if let's say the agri reforms were not kind of formally, finally they did not go through, but the intent was there, and the FPO kind of structure still stays in terms of making it more professional, right? So these are kind of lead indicators. In this budget, I thought the focus on infrastructure and digital, and we can talk more about that later in the conversation. But I think those were the two kind of broad themes which I thought were quite intriguing and quite interesting. Also, the budget was fairly realistic in terms of the numbers itself. If you see the commentary which has come out post-budget, a general consensus has been that the government has been fairly conservative on tax collection numbers. It has not tried to overdo or overstate the revenue which it will be making, and hence the borrowing may seem on the higher side. But if, of course, the revenue surprises on the upside, then the borrowing can be reduced. So and this is true of both direct and indirect tax numbers. So on the indirect side, for example, the GST run rate is typically assumed to be 1.3 lakh crores a month, which we have already hit a few times in the past few months. And on the direct tax also, the run rate that the budget assumes especially for the corporate tax, I mean, that run rate will be met this year itself, in this financial year itself. So in that sense, the numbers are fairly realistic in nature, which also means that the fiscal deficit was slightly higher than what the government had projected by 0.1%. But again, as I said, there's a glide path to fiscal deficit. The numbers are out there in the open, very transparent, and I feel that there could only be a surprise from upside here. I mean, of course, there are other several exogenous factors like geopolitics, etc., globally, but generally speaking, as long as the assumptions hold, the surprise can only be on the upside and not on the downside. So I think that's the defining feature of this budget.
Thanks, Aashish ji. I think that was a very nice summary of the various sort of issues involved. But I want to dig deeper into some of the things that you said. And obviously, the budget has indicated a very significant uptick for capital expenditure, and that has sort of dominated the conversations around it as well. And much of this is going to be channelized through the Pradhan Mantri Gati Shakti plan, the master plan. For the benefit of our viewers, Aashish ji, could you tell us about the focus on infrastructure that Modi government in particular has had over the last 7 years, and also what makes infrastructure so critical for India's economic development?
Yeah, absolutely, Kamal. So, see, the budgetary outlay for the central government capex is capital expenditure, which is essentially when you create assets. So the budgetary outlay for that used to be in the range of 3 lakh crores, maybe in the middle of the last decade. In this budget, including what is on the books and what will be off the books for capex, the government has planned for about 10 lakh crores roughly, which is like a huge jump. So, and of course, I mean, this doesn't include defense budget, which is a different head altogether, where the capex happens on the defense side also. But this is just the hard infrastructure assets, which the government is funding. So, if you see the last 3-4 years, what has happened is at the end of 2019, there was a talk of the national infrastructure pipeline, which laid the vision of what the infrastructure assets will be created in the next 5-6 years. Of course, due to COVID, some of that got derailed, but it's kind of back on track now. There was also an announcement on the national monetization pipeline, which spoke about how the central government will use its existing brownfield assets to monetize them and to bring them into play for common usage again through private participation. So this was not like a selling of assets, but more like giving them on lease or creating a contractual structure where the private party operationalizes the asset and charges the users for it, while the government gets an upfront revenue from that arrangement. So there have been several ideas which have been brought in. Now, one question is, what do you make, which was being addressed by NIP, and how do you use it better, which was being addressed by NMP? But then how do you finance it? The next question is, where do you find the money for it, right? So then there was the establishment of the National Bank for Financing Infrastructure Development, or NABFID, which has been created recently, and hopefully it should start its lending operations in the next quarter, in the first quarter of the next financial year. So there have been a series of steps taken by the government to really focus and zero in on what expenditure can it take up through budgetary and extra budgetary resources. Now, this is very critical because the capital expenditure typically tends to have a higher job multiplier. So what this means is that, let's say, if the government is spending some money on, let's say, building a road or a bridge, you need different types of materials and different types of services for that project, right? So you'll have to acquire land. You will cement will be needed, steel will be needed, there'll be transportation operations, there will be in situ location of people who will then use the local economy for their livelihood while they are residing there. There would be services, jobs created. So there's typically a multiplier effect of all infrastructure projects. The Reserve Bank of India had estimated that the multiplier effect for central government's capex is 3.25. While the state capex is about 2x. So this was in the monetary policy report in 2019. So, which is why the government has been very focused. I mean, of course, there's also the fact that India has always had an infrastructure deficit also. We constantly talk about how we are yet to catch up on some of our infrastructure needs. Our cities are still maybe 20-30 years behind what really is required to sustain the current level of population, current level of employment, and current level of movement of people for the cities, which are typically the economic centers for any state or as a country as a whole. So, which is why the focus has been there on infrastructure. Now, if you add this is of course just a central government number. If you add to it what states will spend from their budgets, what the central public sector enterprises will commit, what the private sector will commit to the pipeline, typically you will see that a 20 lakh crore number is not very far from a capital expenditure budgetary allocation standpoint for the coming years, and of course in the years to come also. So that's a very healthy sign. It also means that the economy needs to be ready to absorb projects which are 20 lakh crores worth of projects, right? That's also so it's not a different problem. 5-6 years earlier, like earlier we were talking about, do we have the money to spend on infrastructure? Now we are saying, well, we have found the money. Where do you spend it? Do we have enough contractors to make enough roads? Right. Can we do railway electrification faster? Can we build more Vande Bharat trains? I mean, the budget talks about 400 trains. How fast can you make them? So questions have become more around capacity and more around skills and more around the general productivity in the economy, and not so much around funding. This is a very good problem shift. I mean, of course, it's a different problem to solve, but it's a great shift to have, because now you're talking about the more, let's say, the capability enhancement aspect of the economy in nature. One final thing I will add to this capex point, Kamal, is that the government has also earmarked about 1 lakh crore of budget for the states to use this budget. They are saying that they will give a 50-year, let's say, a loan, interest-free loans for the states to use on their capex, which is a very interesting side, because it also shows that the central government capex can only be on projects which are very big in nature, right? Like a large irrigation, like large dam, or maybe a metro which is funded from the government resources, roads, railways, of course. But there are several things which need to be done in the states at a very local level, in small towns, improving, let's say, the urban, the facilities in smaller cities, which may not be capital cities or may not be economic centers, but there are, of course, several small cities in the country. So generally, the money takes a time to reach those centers. It starts from the larger cities and then it kind of flows down. So I think this arrangement will help the states to not just focus on their large cities, but also take the benefits of infra to relatively smaller centers as well, and create job in situ jobs in those cities. So I think very interesting focus on capex in this budget.
Absolutely, Aashish. And I think when you mentioned the multiplier effect, I think one additional thing in the case of India, I think, is given the deficit, like you mentioned, for infrastructure and the need for infrastructure, as well as our population density. I feel every kilometer of highway laid down in India is probably far, far more valuable than in any other part of the world, in most other economies. So I think it's actually very critical that we get the infrastructure part right in our economy. And also, shifting focus a little bit, Aashish. So one of the things among the announcements in the budget was also the focus on startups in general, and also various sunrise sectors, including the AVGC, the animation, visual effects, and comics, and so that sector as well as EVs and other things like that. Now, because these are a lot of these are in upcoming fields. So I wanted to ask you, what are India's opportunities when it comes to sunrise sectors like these, and also other sectors that you think are important? And is there anything about India in terms of its placement in the world economy? Is it uniquely placed to deliver on some of these sectors?
Right. So one mega trend which we see, Kamal, in the global economy is digitalization. Right. The world is getting much more connected, and especially after the pandemic, there's been anyway a shift of remote work, about people being able to deliver on projects or on specific assignments irrespective of their locations. How far the trend goes, how permanent it stays, that those are questions we are yet to, let's say, get answers for. But I think there's a fair assumption to make that significant part of work can get digitized and digitalized, I should say, and then more delivered more remotely. Now, with that shift, and of course, then there are other shifts around how people perceive environment, climate change, all of that. So there are also shifts happening on mobility, on transportation. So one is, I mean, how would people want to would people want to travel as much to start off? Then when they travel, how do they travel? Which is where the whole electric vehicle story comes into picture. There are productivity enhancing ideas like spatial mapping, drones, all of that. So these are largely different facets of, I would say, digitalization. The aspects could be directly linked to, let's say, working through internet, but I mean, there's a larger picture here of, let's say, productivity enhancement drivers in the global economy, and the next phase of where that productivity will come from. So, I mean, people call it the fourth industrial revolution, which is around using data and artificial intelligence and the whole concept of digital. So yes, there is a significant shift happening, not just in the Indian economy, but in the global economy.
Right.
Now, in the general area of technology, India has, of course, been established as an outsourcing leader when it comes to the software part of it. Of course, the industrialization process is still going on in India. I would say that we are in the middle of a reindustrialization revolution, where important parts of what should be manufactured or what can be manufactured in India is coming back to India. Right. That enhancement of India's local manufacturing and production capability is currently underway. But certainly on the software side, we have been global leaders in terms of the ability to deliver remotely. Now, in the decade to come, potentially there's an option where the two things can meet together. When we're talking about digital twinning and a lot of manufacturing happening through software in general, I mean, the role of software increases, right? So India has got this unique situation where the if the production or the manufacturing capability picks up and there's a greater software overlay on it, that unique capability of meeting, I mean, making the two things meet could potentially reside in India. Also, there's another shift, which is to say that the innovation centers of a lot of firms, if you see, I mean, the analysts call it the GCCs or the Global Capability Centers. Several of those GCCs are now being located in India, right? So the innovation for many companies globally may anyway be driven out of India in the decade to come or in the years to come. So hence the opportunity is very much there. And you mentioned, as I said, like drones, EVs, AVGC, which is animation, visual effects, gaming, and comics. So I mean, India has got 400 million gamers, right? As per some estimates. Maybe there's some double counting, I don't know, but it will be a fairly big number across platforms. So the opportunity for India is that we have the talent for software, we have the talent, we have emerging talent on hardware in manufacturing. There's also a local market, and there's also the physical location of innovation centers around Indian cities. So I think this is a very potent combination in terms of stepping up on the innovation cycle and helping on the research and development, not just for the Indian firms, but also for the global firms. Right. So if you see, the budget also talks a lot about that in terms of, there's something called Desh, which is digital ecosystem for skilling and livelihood, which was announced in the budget. There's also a lot of talk on how to build better public digital assets and public digital infrastructure from India, which is to say that there has to be a, like we talk about highways, there's also public digital goods like the UPI, or like, let's say, Aashish Bharat, the digital backbone for that, or COVID for vaccination. I mean, these are different examples, and they will continue to add such examples in different walks in life. So with the facilitation which budget and otherwise the policy provides on that backbone, and the opportunities which exist through a unique combination of the software hardware mix which is currently emerging, there are several potential upsides for the sectors which you mentioned. Policies like PLI for auto, this was just announced, and the companies were just announced, like I think yesterday or day before. Drones, we have just banned the imports of drones and focusing more on local manufacturing. So yeah, I think these are all exciting areas, and I hope that new entrepreneurs come in these sectors and help solve the unique Indian problems rather than just trying to solve American or European problems in India. These are problem areas which have very India specific footprint, and hence exciting to also make a social difference.
Absolutely. And I think, like you mentioned, the shift from various other kinds of activities to innovation, and that being the sort of central focus across different themes, that seems really exciting, and a space to watch in the coming years. Aashish, of course, a lot of it has happened because of the private sector and the public sector also coming together. You mentioned the provision of digital public goods. I think that has been very exciting. I mean, for the world as well, a lot of studies are being done on the way India is producing and sort of delivering these digital public goods. But also a lot of economic reforms are yet to be done. A lot has been done. And the reform agenda has moved very sort of consistently. But then there have also been challenges. For example, the agricultural laws and things like that. So going forward, what areas do you think should receive the government's attention, especially on the reforms agenda part?
So, Kamal, on the reform side, if you see the commentary which has come out after the budget, including from those who are involved in making the economic survey, like the principal economic advisor Sanjeev Sanyal, and also from the officials from the Ministry of Finance, you will see that a lot of stress has been put on the process reforms. Now, what are process reforms? These are better ways of doing the same thing. These are reforms which happen in the way the participants in the economy interact with the government. So there have been several examples of these. So let me take a couple of them. So, for example, the way government procurement is done, there is a reform measure which talks about how there will be a focus on quality and not just on the cost aspect of government procurement. So this is of course important because when there are L1 type bidding, which is only on financial bidding, then there's always a risk that you may compromise quality for the price which you are paying, or there could be someone may cut corners because it's the lowest price which is being bid. There are also reforms like capital gains being capped at 15% across asset classes. So this gives more visibility for investors on making decisions as to where they put in money, when do they exit, when do they enter, all of that. So these kind of reforms will continue to happen. These could be sector-based also. For example, when the government announced the Aatmanirbhar Bharat package in May 2020, they spoke about the defense production being corporatized. Now, since then, the ordnance factory they've been rearranged as 7 companies focusing on different types of functions and different capabilities. Even in the budget, there was an announcement that the capex for defense sector, it will have a part of it earmarked for the Indian companies or other companies which are making those goods in India. So, and a significant part of it actually. So these are kind of process reforms which will continue to happen, and these are ongoing process. Again, when you change the ways of working, when you change the underlying assumption of how a department or a ministry or government functions, there's a certain pace at which you can do that. If you bring too much of change, one shot, the system may not be able to absorb it, or there could be derailment of ongoing or disruption of the business as usual kind of the work which happens in any ministry or any department. So there'll be a certain pace at which this will progress. When people speak about reforms, they typically talk about, so these things are not talked about. They focus on factor market reforms, right? Land, labor, capital, and so on. So there's only so much that you can do on the factor market reforms. And also these are there's also a time at which you can do it, a time in the economic and the political cycle, because it needs a lot of, let's say, governance capital, political capital to push them through. And of course, there's a limit to what you can do also, because there isn't much to really, once you've achieved certain milestones, you cannot keep tinkering the same thing over and over again.
Yeah.
So process reforms tend to be more, let's say, you will not find op-eds being written about them, but these are irritants which can hold back certain things or certain level of activity in the economy, and hence they help them resolve such issues. So I think that will be the focus, I believe, in the years to come.
And I think that also addresses a lot of day-to-day and very practical concerns that economic actors, businesses and others have on a day-to-day basis. You mentioned the economic survey, Aashish ji, and the growth rate that the economic survey projects is around 8 to 8.5% for the fiscal year of 2022-23. The IMF has given a higher forecast. So how do you look at the economic outlook for India in the upcoming fiscal year, and also more generally in the next few years? And also, what will be, in your view, the key drivers of growth?
Right. So it is quite interesting that the typical forecast cycle has kind of got inverted, where the IMF and including, I think, RBI also has had pegged a higher growth projection than compared to what came out in the economic survey and in the budget. And which also shows that it has been a fairly realistic assumptions. The assumptions which have gone into the budget are very, very tangible, and there's been as several officials from the Ministry of Finance have spoken, that they have been very realistic about these numbers. You can even call them conservative in some ways. So as I said earlier, that any surprises which might happen may happen on the upside. Very little downside to from where we are. But anyway, I mean, the number aside, the fact is that after the pandemic year, the 2021 year, we have seen a V-shaped recovery. We are almost at the same level of the GDP, and also perhaps a little bit under the trajectory, but we will also catch up on the trajectory soon in the next 1 or 2 quarters. So a fairly, let's say, well-entrenched V-shaped recovery has been seen. Now, of course, the growth in the future has got several variables, and we can talk about both the external factors and what's intrinsic to the economy. On the exogenous side, there's always geopolitics. There's always what's happening around in the world. There is global inflation, which is playing up. So, there are border tensions happening. I mean, there are border tensions for India also, but in more broadly elsewhere in the world as well. So how that impacts, if something happens, if an event happens, and how that impacts the economy, that remains a shock which will have to be dealt with if and when that hits us. The inflation in US and Europe, where there was a lot of talk that it will be transitory in nature. I mean, clearly, we have gone beyond that commentary now. Even the official stances have moved, and the official positions also are now converging towards a more, let's say, a longer lasting inflation. Now that means that the interest rates will be adjusted in the developed worlds fairly quickly. It's already happening. It's already currently underway. So when the interest rates rise in, let's say, Europe or US, what that means is that the real returns in dollar terms from Indian market can go down. It could be more attractive to put money in the US itself. I mean, retain some capital there, because you may get higher return on capital with a higher interest rate, depending on the instruments you choose. So the point is that how will that impact investment cycle, not just in India but in emerging markets in general, and how that what that means for the capital availability and the cost of capital for Indian businesses. That again remains an exogenous variable. But encouraging sign though is that despite the fact that the foreign institutional investors have been pulling out money from Indian markets, the markets haven't fallen. I mean, of course, markets, you can say, are not necessarily the barometer of short-term economy, which is fine. But just as a empirical and anecdotal point, the markets haven't really crashed in India. It's been fairly, there've been a plus 5-10% variation, which is not like really big. And also, the levels keep readjusting also, in between. So it also shows that perhaps the foreign capital flows may have lesser impact on the economy than similar situations I've had in the past. Again, that remains to be seen. We will know in the next, let's say, 2 quarters when some of this plays out. If you look at the intrinsic factor, I mean, we can talk about the 5 factors which make up the 5 broad factors which make up the GDP composition. So the government focus, or the government infrastructure or capex or government expenditure, I mean, that's of course going to remain buoyant. That has been the primary driver of the economic momentum in the last since the pandemic has hit, and I think that obviously we spoke about it continues to be fairly strong. And it may actually be a trend. It may not be just like for this year, but it looks like the government is focusing on increasing the outlay for capex in general. That's been a trend for the last 3-4 years. So hopefully it will continue in the times to come, and there'll be fiscal space to do so. On the consumption side, consumption has been weaker than what it was pre-pandemic. I mean, the reasons are obvious. There are several areas like services, for example, where you cannot consume, because if things remain closed, then you cannot really go out and consume those services. Services being proximate and real time in nature. So the private consumption, even on goods side, I mean, there have been some pockets of disturbance, like rural consumption, for example. So I think some of it, I mean, the expectation here is that as the government spends more on capex, that creates more multiplier effect in the economy, and then people are able to then reset back to the pre-pandemic levels of their consumption. So I think that's again will get tested out in the months to come. But I think that area remains one of the weaker areas right now. On the private expenditure, of course, again the assumption is that as government spends more, it will crowd in the private investment. It will bring in more innovation, and that you already see. I mean, if you see around the news flow, or if you track the quarterly results of the listed companies or even some of the unlisted large firms, a lot of them are talking about capex plans. They're talking about new areas of business, renewable energy investments, green hydrogen, blue hydrogen, electric vehicles, drones. A lot of investments are being talked about in new areas, right? So I think the private, and even if you look at the bank credit growth, although we are of course not at very high numbers like mid-teens, etc., but the private credit growth is also now increasing in the last few fortnights. This data comes out every fortnight actually. So again, there's some level of activity picking up definitely on the private capex side, especially in specific industries, and as the new industries which you talked about earlier in the discussion. Which then of course brings us to the trade aspect, which is the imports and exports. And this financial year we will see the highest exports ever for India at 400 odd billion. We have never hit 400 billion in the past. This is of course goods export, not counting services. But again, the order book seems to be fairly strong even for next year. I mean, the commentary which the industry organizations are talking about, like the Federation of Indian Export Organizations or other industry units like CII, SOCHM. I mean, generally the commentary from them on export order book is also positive, not just the exports this year. So hopefully you will continue to see growth in that aspect. Imports also remain elevated. We have had a fairly high trade deficit in the last 3-4 months. It's narrowed down a bit in January, but it was fairly high for the last 4-5 months of the last calendar year. So yes, I mean, the X minus M aspect, the export minus import aspect is still slightly imbalanced, but the good sign is that the exports are increasing, and that is what you would expect from an economy where focus has been thrust again on manufacturing. 2% of almost 2%, 1.9% of global exports last year, and in 2021 would be India's contribution, and that's gone up from 1.5% to 1.9% fairly quickly in the last few months actually. So in that sense, again, the signs are positive. The export, as you can see around the commentary around, there's been a full focus on expanding the export basket, and we are in several countries. We're talking about FTAs also now. Just earlier this week, there was a discussion where Australia, an early harvest agreement is being talked about with Australia. There was announcement that UAE FTA is very close to be signed, and several other markets which Commerce Minister Piyush Ji named in one of his press meetings around how we are talking to different countries on other FTAs. So clearly, the thrust on getting export numbers up is very much there. So overall, the combination, I mean, how the economy moves, of course, as I said, will be a combination of these exogenous and the intrinsic factors which the economy faces. And the drivers will come certainly from, in the near term, from the government expenditure and from a rise of manufacturing or a rebaselining of manufacturing. The risks are less, let's say, I would say, intrinsic and more external to what we are doing in terms of the geopolitics and the inflation situation globally.
Right. Very, very insightful, Aashish. I think you mentioned a number of indicators with respect to economic growth, but there's also one other indicator which tends to get a lot of attention, and our viewers, I'm sure, would want to know more about, and that's the foreign exchange reserves. And I was just reading, they have been up again, and if you look at the last few years, I think there has been a consistent growth in the foreign exchange reserves. Can you break down what this means and what its implications can be? I think they stand around 632 billion right now, but what does it mean for the economy?
So the role of foreign exchange reserves, the way to look at it is that how many months of your imports are you able to cover through your foreign exchange reserves, right? That's the most, let's say, the easiest way to judge the strength of what your reserves are. I mean, Indian imports could be around 650 billion in a year. So we have got like a year worth of cover. So I think we are fairly healthy in that sense currently, well placed. If you go back in history, there have been times when we've had only 15 days or 1 month of import cover. I mean, when the 1991 reforms were announced, was in the backdrop of that situation where we did not have enough forex to pay for our own oil imports, for example, right? So or the necessary imports which the economy demands to keep functioning. Right now, in several countries around us, the situation has been there where countries have struggled to maintain their level of standard of living because they've not been able to import energy products, for example, and they've suffered in terms of not just their growth but also their day-to-day lifestyle itself. There have been like power cuts and things like that. So there are, I mean, these issues remain when it comes to foreign exchange. No, I think in that sense we are fairly well placed. In fact, we are one of the top 5 reserves now globally. So we have come a long way from the uncertainty of I mean, how India can interact with the global economy. I think the variations which happen on a fortnightly basis, and the data comes out typically every week, every fortnight on how the numbers are moving. Some of it is actually near term. I mean, there's no need to really get worried about a few billion drops in a week, and then it will again pick up, right? As FDI comes in and as the portfolio investment comes in. I mean, these numbers keep changing every with every let's say time period that it is reported in. What is important is to look at the trend. A healthy the trend has been healthy, and if you really see, which also reflects in the strength of the rupee, for example, right? So if you see rupee, we went from the 40-50 levels to 60-65 70 levels pretty quickly, but after that the depreciation has been fairly orderly in nature. I mean, it's been one of the most, let's say, stable currencies on a real effective basis against a basket of currencies especially, and even against USD. I mean, the depreciation has been fairly in tune with the inflation differential. I mean, right now, of course, there's a very strange situation that the US inflation is higher than Indian inflation. So, but I mean, that aside, the rupee depreciation has not been has not been a cause of worry, especially what happened in 2000, early part of the last decade, where the whole taper tantrum, and we spoke about fragile 5 and all of that. So rupee suffered in a big way then. So those kind of drops have not been, and I think that also points towards macro stability in general, and also means that at some point, I mean, if I mean, I don't think this is being considered, I am not privy to this, but when RBI wants to make rupee more free floating in nature, I mean, have less controls on how its levels are managed, it makes it an easier decision, because there's no issue about the forex reserves which are backing the rupee levels against other currencies. So I think that's overall a fairly stable macroeconomic picture, and a fairly good picture compared to what India has seen in the past decades.
Right. Thanks, Aashish ji. I think it's been a very insightful discussion about the macroeconomic trajectory that India is going to take in the next coming years. Thank you so much, Aashish ji. Thank you for joining us, and we hope to have you again.
Thank you, Kamal, for having me.
Thank you, and namaste to all our viewers. We'll be back with another such fascinating conversation. Thank you for joining.
Please remember to subscribe to us and switch on the notifications for this channel. For our other social media links, more content, and to support our work, please visit citti.net. Dhanyavad. Namaskar.